Urgent update for Bitcoin London with Bitcoin Spike. I want to talk about the classic institutional definition for an inverse head and shoulder. Yes, the left shoulder, the head, the right shoulder. It's a head and shoulders bottom. That's the referral to it. The left shoulder, the head, the right shoulder on the actual Bitcoin chart. Let's go through the details in a short video. First of all, we're going to zoom in. This is the New York Institute of Finance, literally where Wall Street goes to school. I want to bring you the accurate information. Shout out to our VIP. You'll see the neckline right in this area. You understand the classic definition would require the left shoulder up to the neckline, down to the head, up to the neckline, and then to the right shoulder. Boom, with a breakout up and over that neckline. That's what's technically required. Now, as we apply this to the Bitcoin chart, we see the left shoulder, we see the head, we see the right shoulder. I want to talk about the details behind the basic structure. Very important, and I want to make sure that you're fully aware of the preceding price action as well, which could operate as a warning, okay, as a warning. Now, in terms of the details, let's read this. This is per the New York Institute of Finance, copyright, and I know that all the VIP have a copy of their materials. You should get it today, and you definitely need to join our VIP if you're interested in the correct answers. Now, in terms of TA, guys, so that you can perform the TA. Looking at this real quickly, the difference, they talk about the difference between the regular head and shoulders and the inverse head and shoulders. Let's cover volume second. First of all, we're going to cover the following. It says one slight difference. Look at this. One slight difference at the bottom, essentially the head and shoulders bottom. And I want to make sure that you guys understand. It's literally called, if you see this, the head and shoulders bottom. Look at this, head and shoulders bottom, okay? We're going to require, in terms of volume, going to be very interesting in terms of what's going to be required of the buyers. We'll get into that in 1 second. However, one slight difference at the bottom, okay, in inverse head and shoulders, is the greater tendency for the return move back to the neckline to occur after the bullish breakout. Let's take a look at the specific pattern formation that we have, because the last 24 to 48 hours, we've kind of languished along. We haven't gotten that momentum that we've wanted, and I think it's very relevant that we would look at this tendency that we just read about from the left shoulder, the head, the right shoulder, a tendency to return to this specific neckline. Very important. Take a look at the specifics on the 15-minute time frame. Very indicative of such that we're just languishing there along that neckline. I find some conformance there and some validity in terms of the New York Institute of Finance information. Let's dig into the residual, which is extremely important in terms of what's going to be said here of this specific pattern, the head and shoulders bottom. And again, when I say the head and shoulders bottom, just understand that's exactly what the pattern is entitled, head and shoulders bottom. Okay, so let's take a look at this as everyone's hunting for the bottom in the market. And this is London with Bitcoin Spike. A pleasure to bring you this information. Let's zoom in and read real quickly. Look at this, guys. The most important difference between the top and bottom pattern is the volume sequence. Volume plays a much more critical role in the identification and completion of the head and shoulders bottom. There we go. This point is generally true of all bottom patterns. Listen, guys, everyone's looking for the bottom. This is generally true of all bottom patterns. It was stated earlier that the markets have a tendency to fall of their own weight, talking about retracements, downward price action. Listen to this. At bottoms, however, markets require a significant increase in buying pressure, reflected in greater volume to launch a new bull market. Understand what is going to be the bottom. It's going to be the initiation of a new bull market. Thus, if we're looking for the reversal here, if we're looking for the bottom of the price action, we are to instigate a new bull market. That's going to be indicated. That's going to be accompanied by, guys, it's going to be accompanied by more volume than what we see right here. Do you see the volume along the bottom decreasing? We're going to need to accompany the specific pattern completion of this inverse head and shoulders bottom. We're to complete the requirements. The technical requirements are, guys, we need some major volume. Bottom line, very important as you see this volume just completely disappearing. That's going to be crucial, guys, textbook, as we're looking at this potential here. I wanted to bring it to your attention. I also want to shout out to the VIP. Very importantly, we're going to talk about Bill today, the top trader in VIP, just in terms of returns, 245%. Way to go, Bill. Bill's been VIP for a couple of weeks now, and we're really excited, Bill, to say you're fitting in. You're just you're the leader today. I want to also shout out to Venus, 91%. To Bill again, 161%, and Bill and Freddie, everybody literally is trading in the back. Look at Freddie, 131%. Torque, I know you're also trading. VIP are trading. If you are looking to trade this sequence, you're going to have to get involved with some volume. I'll tell you, and the bottom's going to be accompanied by volume. So I'm excited to bring you guys that information. Technical, guys, I'm going to say technical analysis requires some patience. So I'm going to let you know. Also, we'd love you to join our VIP. It'll give you access to our back rooms. Top traders, if you want to advance your trade game in 2022, hit this link. Join the top level of membership. This is London with Bitcoin Spike. Prior hedge fund owner, but not financial advice. You know that. And once you join, go ahead and click on that first pinned tweet and boom, let me know I am BIP. I will put you in the back looking at this. And guys, the hedge fund, non-SEC, just so that you know that, non-SEC private. We'll put you in the back with, guys, it is a team environment. I'm going to let you know back there. It's not just signals, guys. It's the top traders. It's the guys who want to be the top traders in crypto, and I'll let you know. As a matter of fact, we can just tell by who the top traders are or who wants to be the top traders in crypto because they're literally in VIP. They've joined VIP. So to the extent that you're new to crypto or you're a veteran, we'll tell you also if you're a blue collar or white collar, old collar or new collar, you belong if you want to beat the market with VIP. This is London with Bitcoin Spike. Hope you appreciated this specific diagram here. Just very nicely done. Very well laid out by New York Institute of Finance. All the material is copyright by them. And make sure that you get the book today. John J. Murphy, Technical Analysis of the Financial Market. All of this information is, I'm going to say it's available on the internet, yes, but I'm going to say it's also copyright by them. So not intended for distribution beyond this video, and to the extent that you find it of interest, please go buy the New York Institute of Finance book. And shout out to all of the VIP. We'll talk to you soon. Bye-bye.